Welcome to another live market trade review session. My name is Chima Burey, and I'm the head Forex instructor at iFund Traders, and wanted to review a few trades with you guys today. We are looking at the Euro-Yen currency pair. We actually entered into this trade a few days ago, and we've already collected a portion of our profit with one of our trail techniques using the bar-by-bar method, where we actually booked about 33 pips. And in our analysis, we saw that the trade has some additional potential to move lower. So what we do, when we take a portion of our profit on a lower time frame, we tend to trail that particular currency pair on a higher time frame using a different technique. And this is using the trailing 8 technique that we teach. Now, one of the things that I noticed on the previous review that we looked at, the potential for the market to move lower. There was an actual trend line break. As we can see here, price touched about 1, 2, 3, 4, 5, 6, let's say 6 or 7 points, and it broke support, came back, tested, which became resistance, and now we can see ourselves up about, let's say, 100, 120, 132 pips. All right, so not too bad. First trade did about 33 pips. Now we're currently up about 133. As we can see on our higher time frame, our daily, we're in a nice downtrend. This is one of the reasons why we decided to trail the second portion of our trade on our higher time frame. All right, so as we switch back, let's go back to our 4-hour, and we'll see on our daily. I like the lower target here. On the low that we have on the daily, and on the 4-hour, let's see if we can see that too. Yeah, the low where the trend line is starting, I like that as a point, but let's see where the market takes us. All right, everybody, let's look at the follow-up to the Euro-Yen trade. All right, so we're currently still in this trade. However, we have come across an area of consolidation, not to be confused with indecision. All right, as we move to our hourly chart, we see that that congested area is becoming a little bit less congested, meaning that we're able to interpret the market a little bit better. So if you're on a 30-minute chart and it looks a little bunched up, then I suggest that you move to your hourly. Stretch the chart out a little bit, and so we can take a look at it. 4-hour, a little bit less congestion. All right, so based on our analysis, we can see that the market is pushing downward. Now, the market doesn't move in a straight line. We have to understand that the market does move in waves. So these little areas of retracement, or the fact that we get a small pullback, we shouldn't confuse that with a trend reversal. All right, so the event that's taking place right now is called a 180. Now, what's so important about this is that it's taking place at a key location. Now, as we move to our daily chart, there we go. That looks a little bit more like it. So we're not confused by the direction. So even though we're actually seeing an area of consolidation, remember, it is not an area of indecision. So it's an opportunity for you guys to take advantage of the market. You see where the market is pausing. Look at that. Our sell actually just triggered while we're looking at this. Awesome. So here we go. We see the tails to the top, and that's what we call price rejection. Price is actually pushing away from our 8 and our 20 and also our trend line and pushing through our sell stop. So our sell stop is now converted to an actual short position. All right, so now it's a waiting game. Let's see what happens, and let's see if the market continues to move in our direction, which I think it will. Let's see. Okay, everybody, let's talk about a key area in this Euro-Yen trade, and it's called support. Now, too often, my new traders, or what I call retail traders, they get timid or they get afraid every time price pauses, all right, or stops at a support level. Now, not every support level is the final support level. Let's take a look at our trade so far. We're up about 39, 30, yeah, let's say about 38, 39 pips, which is great. And this is our second trade. So this is the second one. Now, as we look at the higher time frames, now we're on the 30. We see price has bounced at a previous low. On the hourly, we see price has bounced at that previous low. Now, when we look at our higher time frame, we're seeing the velocity or the emotion that's going into this trade. We can see that the momentum is still carrying this lower. Now, do we expect price to bounce at areas of support? We do. It doesn't mean that they're going to stop there. So our first level or our first trade, we're up about I didn't get that. Let me get that again. About 100 and let's say about 41 pips. Great. And on our second entry, we're up about, let's say, yeah, about 39 pips. Let's see where it takes us. All right, we're going to trail this by the 8 technique. All right, let's take a look at the pound dollar. Now, in this chart, we see that we're currently in a sell position. Obviously, the price broke below the 8 and the 20, which triggered a short. And it's also doing something currently. It is consolidating. Now, one would ask, well, it's consolidating, so why would we put an entry below consolidation? Well, too often, once again, similar to that of the euro-yen trade, that area is considered an area of indecision. Now, I'm not confused as to where the market's going. I'm just waiting for the market to get enough momentum to carry us lower. As we can see on our 30-minute chart, guess what? That's not an area of indecision. It looks pretty decisive as to where price is going to go. Now, price does this. It takes pauses. It moves in waves. It generates momentum from time to time. So we have to be able to recognize the areas in which price is taking a quick pause to where it's getting momentum or wanting to gain momentum in order to take it lower. Let's look at the 4-hour. Look at that. We have 2 big elephant bars to the downside. All right. And the most recent one is price rejection off the 20. Let's take this off. And now we can see it a little bit more clearer, the rejection off the 8. So price is definitely holding to the emotion that we see in the previous 4-hour bar. Let's see where this takes us. Okay. Now something is going on here with the pound dollar. Now I put a sell stop in place very close to the horizontal blue line you see there, and price didn't trigger. It didn't follow through. It didn't go through. It's kept going higher. As we can see, price hasn't triggered it, and I've placed another one. So I have 2 sell stops. Now, why do I have 2? Now, price most recently has rejected the moving averages yet again, as we can see here on the 4-hour. Price actually went up and retested the trend line. All right. Now, in doing so, it's created another area of consolidation. Now, price has gone up and hit the 8 and the 20 on the hourly. And look what it's doing. It's giving us what we call a number 2 bearish bar. Now, this is only in place if price proves itself by moving lower. If it keeps going higher, then it won't trigger me in. Let's see what happens. All right, boys and girls, guess what we have here? We have some trades on the pound dollar. All right, so our sell stops have now triggered into profitable trades. Now we're currently up 27, let's say, 27 pips on our most recent. Our next one, we're up about, let's say, 45 pips. And our first one, we're up about 72 pips. All right, this is key. This is very important because obviously we were in the initial trade, and then we use a technique where we actually stalk price. We watch price during the pullback or during the reversal, and we find areas of consolidation where we can actually put a sell stop in place. Let me move the chart. All right, to where we can actually take advantage of the pullback. All right, so we do that, find the areas of consolidation, and wait for the market to continue in the overall direction. Now let's look at this. This is the big daddy. The 4-hour chart is telling us a story. Let's look at these elephant bars. Look how powerful those bars are. Now these tend to mean something, or tend to tell us that something very dynamic is going to take place. More likely than not, what it's really telling us is that price is ready to move lower. Now we have about another, let's say, 2 hours left in the most recent 4-hour bar. Now as long as that doesn't wipe out the emotion of the red bar created, we should be all primed, ready to move lower. And my target is the 200 on the daily. There it is right there. As soon as we hit that, we're out. All right, everybody, guess what? We have hit our target. It is money time. All right, so it's time for us to take our profits. The 200 moving average daily target that we had in mind has been hit. All right, so we have actually entered into a fourth trade. Last time you were with me, we had only 3, but what price had done, it had entered into an area of consolidation yet again, and so I decided to take advantage yet again. All right, so areas of consolidation should not be confused as areas of indecision. So as we can see, that area right here, price started to pause yet again. I said, all right, you know what? I'm already up considerably on my first 3 positions. Why not take a fourth? All right, so on our 30-minute chart, you can see it pretty clearly here. Now, so far, so good. We're up about 130 on our first. We're up, let's say, about 101 on our second. And we're up about 83 on our third, and we are up about 41 on our fourth. This is a fantastic trade. Back to our hourly, we can see how everything developed nicely and turned into such a beautiful trade. 4-hour trade. There's the follow through on the elephant bar, and on our daily, cha-ching. The eagle has landed. Thanks, guys. Great trading. All these techniques you will learn and a lot more with us. Join the team. Join the movement. Visit us, www.ifundtraders.com.